Hello, welcome to this very special coverage on Bloomberg Quint Live. I am Neeraj Shah, with me is Agam Vakil, and well, we're calling it sharp swings because that's what the markets have shown today. Agam, if there was ever a day wherein we've seen sharper swings in this current calendar, I can't remember, because it was all over the place for the Nifty Bank, and specific names as well.
Right, Neeraj, and so close to an expiry too, which is why I'm really curious about the kind of action that we've seen in the futures and options space. And I know that a lot of the data that we will present right now will not be the full and final one, considering the power copy will determine that. But well, if you want to take us through the way that we've seen the market.
No, I think the intraday of the Nifty, Agam, just that one chart will explain to you the reason why we're calling this sharp swings, and how an opportunity and a big loss would have happened for a bunch of traders today. Because mind you, and a couple of stats will come up after that. First, this is how the index behaved today, and midway through trade, somewhere around lunch, when this whole Yes Bank was anyways out there, but when the DHFL and the Indiabulls Housing Finance stocks started cracking, a big crack, then a bit of a pullback, again a crack, again a bit of a pullback. And in today's session, by the way, the volumes substantially higher, and not just the FNO volumes, by the way, Agam, I know you'll talk about it,
right.
But if you get the turnover up on your screen, look at the cash market volumes, 64,000 crores.
This is almost twice as much as the average that we've seen over the previous few weeks, for that matter.
And I haven't seen such high volumes ever. I think these must be record high volumes on the NSE cash for sure. Not on the FNO, but the cash market volumes would be record highs for sure.
Yeah, and as one might expect, the FNO turnovers, that's not too much of a, I would say a mystery. But we have to remember that because the fact that the NSE cash turnovers are so high, that means that we can expect a lot of institutional participation in today's selling coming
Yeah,
through.
we'll see that too. Now, very quickly, I just want to show two charts, and we'll get to that as well in just moments from now. And then we'll talk about the reasons for these stocks doing what they did. But Agam, if you want to just quickly take us through how the derivative picture looked like today.
That's right. So let's start quickly with the futures. That's the Nifty futures. And let's bring the rollovers plate here. And the reason why I want to bring that is because we are towards the end of the September series. We're seeing a substantial uptick in your October open interest towards shorts. It's the same for the Nifty banking rollovers as well. And pull that up, and there you have it, about another 66% jump there. The India Volatility Index, again, as one might expect, will have seen a surge of well over 11% now, well above the mark of 15.5. In terms of the way we've seen options change and the options activity change, do remember that most activity was around the 11,100 and 200 mark, and because of that, we've seen more writing around the 11,200 call as well. When it comes to open interest distribution, let's bring that up as well and see where you have maximum open interest currently, if we can pull that chart out as well. Now, this is where things are starting to change as the range moves in lower, and now it's 11,000. Do remember, we did see the Nifty move below that mark in today's day on an intraday basis. Of course, on the higher side, it really wouldn't matter, but perhaps 11,400 is what we are keeping an eye on. Stocks, we can't not talk about Yes Bank. We did see a substantial decline there. Of course, we've seen an increase in open interest, but I want to talk about the options here, because Yes Bank closed at about 318 last Wednesday, and well, that's where you see it's about 226, which means that if someone had bought there you have it, that's the 320 put, and that's currently at 95. That has moved up 10 times. So this particular put was available for around 8.9. That's the premium, and it's moved up to 95.
8.9 where? On Wednesday?
On Wednesday.
Wow.
And this is now closed at 95. And let's pull up the 300 put as well. This had closed at 2.4 last Wednesday, and it has now moved to 75. Neeraj, because this is a zero-sum game, I do not want to recount what anyone who would have sold these puts would have gone through. They would have lost just at that much.
Yeah.
So it would be unfortunate for those who were short on some of these option premiums.
But Agam, simply put, I mean, I was speaking to a few experts off air, of course, not on record.
Right.
They were all saying, and the Yes Bank chart would be interesting out here. Look at that fall. This is, of course, the market cap erosion, and this is the fall that we saw in today's session. But people that I spoke to are wary about what could come out of the closet of Yes Bank if indeed there's an external MD and CEO coming into place, and he finding that what if there are some more skeletons in the closet of Yes Bank. I think that's the fear why, despite the numbers that they've posted all through the years, people did not want to touch the stock today. Now that the announcement is clear that Rana Kapoor is there only for the next 4 months. So I think this was one stock that was under pressure today. And then, of course, during the course of the day, the story of the market today was all about, one, what happened to Yes Bank in the morning, and then what happened to Diwan Housing and Indiabulls Housing Finance in the session. And this was the worst day in history for Diwan Housing Finance. And this chart will show you, look at the fall on Diwan Housing Finance, this big red bar that Agam is pointing towards. I mean, that just sums up what happened in the session today. Let's hear out what the management had to say. We connected with Indiabulls Housing Finance and Diwan Housing Finance, the two names that got pummeled in trade today. Hear out what they had to say.
One thing which I should tell you is that we are sitting on extremely strong liquidity position. So we have a very small commercial paper, which obviously has already been factored into our ALM position and vis-a-vis our liquidity. So yes, I mean it's business as usual as far as we are concerned, or at least it was till this morning. I have honestly, it has actually taken us by surprise as well. Now, obviously, there was no communication. We all know that 2 weeks ago, there was a lot of, panic around, or rather the panic has been continuing since the last 2 weeks, on one of the other, non-banking entities in the marketplace. And possibly, all these rumor mills have actually led to what we are seeing today in the market.
So clearly, I think there has been some fear-mongering or shorting of the marketplace for a company like Indiabulls Housing Finance, which is the most liquid balance sheet in the entire country. We are the only housing finance company or non-bank who maintains 20% of the balance sheet in form of cash invested in T+1 basis in mutual fund liquid schemes. So we have, in fact, been a beneficiary of liquidity crisis in the market in the past. I believe with this kind of a liquidity of more than 20,000 crore of cash on balance sheet, we are the last man standing. 6 months, if we don't borrow a single rupee, we should be able to pay back all our liabilities, disburse all our home loans, and still left with 25% margin cushion.
Well, that's the sum and substance of what was plaguing the markets today. And frankly, if you just take a look at the heat map, this is today's performance, mind you. You'll see Yes Bank and Indiabulls Housing Finance out there, but a lot of other financial names, Bajaj Finance came under pressure, Kotak Bank came under pressure. There were some winners, the likes of oil and gas and IT, but those were few and far in between, Agam.
Well, there you have it. That's the way your markets are panned out. But we also spoke to two market veterans, Basant Maheshwari as well as Madhusudan Kela. And this is what they had to say about the outlook going forward. Listen in.
Most portfolios after a bull market normally have craps. They don't have the good quality names, and the reason is because the good quality names underperform the craps at the fag end of a bull market. So even though you would have been a very disciplined and a sophisticated investor in your own words, your portfolio wouldn't be running as fast as your neighbors because your neighbor would have loaded onto inferior grade companies. So suddenly, towards the end of a bull market, most portfolios become overloaded with low quality stocks. So, and that's where the problem is. See, a low quality stocks falls, 30-40% without giving you any reason. And the high quality ones will fall 20-25% and still stay there. And they'll give you a chance to exit also. So I think at this time, till the time we have elections next year, you have to be very, very cautious of what you are buying. Don't try and hit those 35, 40, 50% CAGR returns. They're not going to come anytime soon. But still, if you can buy companies that are growing at 25, 30 with predictability and surety, which we normally do, and of course, it's very difficult to be doing that time and again because there would always be companies that would double up in 3 or 4 or 5 months, but this is not the time to be adventurous. I think the market, in all its wisdom, is now discounting a scenario where the present government, even if it is voted back, comes back with a lower majority or maybe with a different leader. I don't know. I'm not a political expert on that, but I think the market, in its own wisdom, is sending us some messages.
I think this kind of fall is normal. I don't think there is any cause or systematic risk which we should say that because Nifty corrected from the peak of 700-800 points, there is anything systemic which has happened and that cause of worry. You have to be long-term in your nature. You have to do systematic investing. You have to only buy as much as you can hold for a period of 3-5 years. Because if you are a leverage trader, then the advice is completely different. Then you have to respect prices. Then you have to respect the stop loss. For a trader, it's a different ballgame. But for an investor, it's a different ballgame even in these markets.
So that's the word coming in from some of those veterans out there. They suggest that while it isn't really time to be adventurous, you can still go ahead and make your investments in a systematic basis. That said, whether or not we do see a recovery after the kind of carnage that we've seen in today's day of trade, that's a question that needs to be answered, and we will know that. But with that, it's a wrap from my side as well as Neeraj on this special coverage on the show. But for more news and updates, stay tuned to Bloomberg Quint, and we will keep bringing you more.